What's going on, everyone? Troy and Don from Define Labs Production, where we dive into the world of cryptocurrency, innovation, and the complexities of this industry, guys. This is a very exciting day because we're going to dive into some crucial basic knowledge that I think could be everyone, whatever your skill level is. This is perfect for anyone. So, first things first, the market's down a little bit. We had some big decisions with the Fed, which we can talk about that. But, grab your coffee. I mean, it's a little late if you're on the Eastern time, but grab your coffee, water, and get ready for some crazy, crazy knowledge and alpha. That's what we have to
Celsius.
say. Or your Celsius.
Celsius, if you are watching this, we are open to sponsorships.
I do want to say one thing. For people that do invest and trade, and I've been doing a little bit of trading recently, and for the last 2 years, I've been mostly doing the investing side of things. So the real difference between investing and trading is the time frames. When you're looking at something in a 6 month to a year, it's more of an investment vehicle, right? And trading's more of a shorter term play. So I've been diving down the rabbit hole of trading options, and it's a little bit separate from stocks, or from crypto, but you can do it with crypto as well. And basically what I've realized, and I've been doing this for a while, was being a successful trader or even an investor, you have to be disciplined. Now, what I mean by that is not just like disciplined when you're making like your systematic trades and you're actually looking at the screen and placing a trade or a buy and sell order, but being more disciplined in your real life. Because if you're eating like shit, and if you're eating like shit and you're not working out and you're not taking care of yourself, you're taking care of your mental health, and you show up to the screens, it's going to really give you a smoke screen and really cloudy, like make your investment decisions very not smart. Like I noticed that, and I noticed it because I noticed a trend that the less disciplined I am in my life, the less disciplined I am on the charts. And it actually affects like your day-to-day trading. I know Don's not a big trader, but I've been doing it, and it's a lot harder than a lot of the influencers. Like you'll see a bunch of influencers or people online like showing their wins, but never their losses, and making it seem like, oh, this is the way to break out. But it's really a game, and it's a game with yourself. And if you can master the game, and that's how I look at it. I look at it like a game. And if you can master that part of your life, then it's going to be a breeze when you're actually doing the trading. Try it for yourself, man. Like for example, like going to bed at the same time, waking up at the same time, getting a liter of water in the morning, getting some sunlight, going to the gym, doing stuff like that really will be a reflection. So what I like to look at it is a mirror. Like your successful trades are a mirror to your day-to-day life. And obviously you have to be a good trader. It's a psychological game. You have to control your emotions, not FOMO into things at the top. Build your own theses. Now, before I do trade, I'm always building my own thesis. And you might like feel the same way if you started trading or investing. Like when you first get into this game, you're going to feel like you're going to be chasing other people's ideas. Like you're not going to be building your own research, and it might work once, but to be a consistent and make this a sustainable business, you're going to have to be able to develop your own theses. And a perfect example of a thesis is looking at, some real world macroeconomic events, upgrades, downgrades, acquisitions, different, product research, stuff like this can definitely be a catalyst. And then you can use those catalysts and then look at the trade intraday and find the right setups. But that's what I've noticed, man. It's like a game of chess. Like you always have to be thinking a step ahead. You have to be forward thinking. And it's in one big hiccup could really change the outcome of your trade. So that's how I kind of look at it. And that kind of like helps me be detached from my actual like the price, because when I look at it like points, not as like dollar signs, it helps me with my psychology. Does that make sense? Like you have to separate all emotions from your trading and investing. Think clear minded, and then everything's good from there.
I just want noted for the record.
What's up?
I let you go for like 6 minutes before I said anything.
Oh,
I didn't cut you off.
Don.
So I think that's a record of me letting you speak without interrupting, because we all know that Don likes to speak
Don
a lot.
loves to speak.
And cut you off. So I'm happy I let you get that there.
I had to get that off my chest, guys, because people will come in and they have to separate trading from investing. Like have completely two separate accounts, because when you're intermingling all this stuff, it's just going to get all congested, and you have to be like really organized with this stuff. But like, I know you're a big investor, you're a hodler, they like to say, and you're not a big, trader, but do you know like how that can make sense? Like it's a straight mirror. Like
Yeah. I think the reason one of the reasons why our podcast is so valuable in the sphere of this ecosystem of Bitcoin and crypto as well as investing is because of the dynamic that we bring to the table. You mentioned that I'm more of a longer term investor than I am a trader. I have some trading in my past, some stock trading here and there,
yeah,
a little bit of shitcoin crypto trading as well. But for the majority of the wealth that I've been accumulating, I'm the Warren Buffett school of philosophy where I buy good assets and just hold on to them. But getting to the point of why I think this podcast is so valuable for people is because you have two guys, me and Troy are very good friends, and we come from two separate like thesis backgrounds. I'm the Bitcoin guy. I'm also older, and I also have the experience of like seeing things play out. Troy is the younger guy. He's into more coins, crypto coins than I'm into, knows a whole hell of a lot more about that part of the ecosystem than I know. And he also dabbles in the trading and has a system of trading that works, that shows profit and will bring value, right? He's not the people that I'm talking about, the 98 to 99% of the people that will attempt to trade and invest and end up going bankrupt. He's put the time in, he dedicates his life to that aspect and brings value in that aspect. So you see that perspective, and then you see my perspective of accumulating Bitcoin, talking about buying assets, holding assets for long periods of time, me viewing things in a very slow, methodic pace. You're more like the hare, and I'm more like the tortoise. You know what I mean? And there's value in that. And it's not that you're right and I'm wrong, or vice versa. It's just like we have two different philosophies that we also have the opportunity to like hear on a weekly basis, and for us daily, because we're always in contact, to like see how the other side continues to think. Because when you have holes in your thesis, that's how you lose money, right?
Yeah.
Just because I think the way that I think doesn't mean that there's not value in seeing how somebody else views it completely differently and may come at me with a philosophy that I don't agree with, but could still find value from, and vice versa. So when somebody watches the Defiant Productions podcast, you're getting both ends. I'm saying that I'm not a trader, and I'm saying that most people that trade are going to lose. But then you come from the philosophy of, yes, you agree with that, but you also see it from the place of, I know how to do this, and I know how to be successful at it, and I know how to do the things that you said. View it like I view exercise, working out, mental health, other areas of life that people can identify with that they've made significant change in and seen progress. That's how you got to view that. I like how you made that correlation.
I also like to view it as a business, right? I'm not going to sit here and lie to you and say I haven't lost money trading. Like year one, year two, you're going to lose money. And that's the difference between the winners and the losers, because the losers don't want to lose money. They end up losing money, but they don't come in the mindset like, I'm going to lose money. No, they're paid lessons. Like you have to treat it like a business. Like let's say you go start a business tomorrow, and it's $10,000 to start the business. Well, you're going to lose money at first. All successful businesses lose money. Now, when you're losing money, you're building experience, and that experience could be beneficial for you long term. So you have to come in, treat it like a business, realize you're not going to be a profitable trader in 6 months, a year, 2 years. It's going to take 3 to 5, even 10 years. But most people don't stick around long enough to see the rewards, to reap the rewards, and they end up quitting. And that's when you say 98% of traders aren't successful. I guarantee a high percentage of that are from people that quit, and they could have been successful, but they didn't have the patience to stick around long enough. And that's when I go back, man. You have to be disciplined in your day-to-day life. If you're not disciplined, going to the gym, eating healthy, like you're not going to be disciplined on the charts. It's just a fact. Like every successful trader has a routine that they stick by every day and every night. You can't be up all night, and then think you're going to just be profitable. It's just not how it works.
Well, when you sit down with a financial advisor and you sit down with somebody that's going to map out some sort of financial plan for you, one of the first questions that they're going to ask is, what is your risk tolerance, right? If you can't answer that question, you damn sure better not be putting any money at work at all in the markets, because if you don't know what your risk tolerance is,
Yeah.
you're going to have a very hard time navigating trying to make money investing, right? If you don't know if you have a long-term horizon, a short-term horizon, if you don't know if you can take losing 50% of your portfolio in a short period of time, or you don't know how you're emotionally going to react in those circumstances when markets are in complete turmoil and your emotions are going all over the place, and you have to make a decision in that moment that could affect your whole year, right? So understanding the risk tolerance piece is extremely vital in being successful in any investment space, not just more so in Bitcoin and crypto for sure. If your risk tolerance is low, you definitely, if you're going to come in this space, you better just buy Bitcoin and hold and just stop looking. Don't even look at the charts.
Yeah. Risk tolerance is huge, man. I can, and the bigger the numbers get, like as your portfolio grows, the bigger the number, like the percentages are going to be. Like 5% or 10% on $1,000 is $100. You got a $100,000 portfolio. That 10% is going to be 10,000, and you have to be able to stomach that. So it's good that you're building up the tolerance over time till you get to that point where your account's so big you can stomach that. Like the crypto accounts, the crypto swings I'm seeing are like some days like $10,000 swings, like on the downside, but also on the upside too. Yeah. But if you can't stomach that, but you know, if you first come into this market, that's going to scare the shit out of you. You have to know, like, all right, you build your conviction, you know, build your trust in understanding the process, and that's why like people are going to deserve, you know, everything that happens in the next 12 to 18 months when, you know, crypto's breaking all-time high and we're on your feed, on Facebook feed once a week, posting reels almost every single day, telling you to plan now, and you're sitting here sidelined, and then you're going to reach out to us in when it's too late, when the risk is higher. It's all about R to R. You have to understand your risk and reward. The reward is much greater in this asset class than the risk. Now, 12 to 18 months, if you're doing a little bit of trading, the risk is going to be higher and the reward's going to be less. And that's understanding time frames. That's understanding what part of the cycle that we're in. And, you know, I'm happy we're having this conversation. This is one of my favorite podcasts. I love talking about trading and stuff. It's just like,
you're doing really good today. Just so you know, just
it's
pat you on the back. The Andrew Tate look is working. Do you know what I think it was Warren Buffett. It could have been Charlie Munger, but one of those two guys. Do you know what they said the hardest amount of money to get to is?
100,000.
Yeah. Yeah,
so the first 100, and that's good. Absolutely true.
So the first 100,000 is the hardest to make. So I remember the first time I got to 100,000, right? And it was through crypto. Crypto was what me seeing $100,000 like net worth next to my name was through investing, not trading, investing into Bitcoin and holding Bitcoin and, you know, doing all the things that I've talked about in previous podcasts. But like it was hard to get to that number, but then what's even harder, what they don't talk about after that, is watching like a 6-figure net worth get sliced in half. You know what I mean? Like watching a red day like evaporate, you know, what you make in a year, damn near close than what you make in a year, and not panic, not making an irrational decision that evaporates your entire portfolio. Because let me just give you a quick math example, and this is not what I did, of course, but this is what somebody could do, right? Let's say you have 100,000 and you made that through investing. So you're gonna be on the hook when you realize those profits that you made for a tax event, right? So let's say that you lose 50,000. So your 100,000 went from 100,000 to 50,000. You panic. Now you sell. So now you owe taxes on the 50,000, right? You're never getting the other 50,000 back because you're selling out, right? Mm-hmm. You only lose when you actually sell. That's when you lose. Your paper losses are only paper losses until you actually take money off the table. So now that 50,000, you're probably going to pay somewhere between 13 to 15,000 in taxes. So now you walk away with a $30,000 or $35,000 cash value from the 100 that you had, and then you watch everything come back right back to the 100,000 you had before, and then rocket past that. So not only did you lose the 65,000 because you got out of the game, but all the gains that are coming after that you also lose because you made that irrational panic sell decision.
And I want to add to that, and there's two basic terms that we need to really understand: is realized and unrealized. So a realized gain or a realized loss is something when you buy and sell a security or a commodity. An unrealized gain or loss is when you don't sell, it's just the daily price fluctuation. So when I talk about these swings on the crypto accounts that are multiple five figures, $20,000 swings, these are unrealized gains, unrealized losses. Now, when I'm doing the trading, you're realizing those gains and losses.
Because you're doing it in that shorter time frame.
And another thing I want to add is there's a difference between watching your portfolio go from 100,000 to 50,000 and not having any idea on what you're invested in because you didn't do any of your own research. You didn't build your own thesis and build your convictions. You're just listening to Joe Schmo or whoever on Twitter, and it does a 50% haircut. But you can also there's different tools you can use to actually mitigate your losses, like a stop loss, or a limit order, right? And now that comes down to, are you investing and trading? If you're investing, you're not going to be using a stop loss, right? I'm not, especially besides Bitcoin and actually scratch that. I have 70 different crypto coins. I have not one stop loss on that. But it really comes down, if you're doing a day trade, you're going to want to stop loss. That's an example it's probability trading.
That's the specific demographic when we talk about trading. Like when I talk about 98 to 99% of people failing that's day trading. The people that are trading in and out in a day, the odds of you making a living doing that long term are just almost nothing.
Yeah.
Just almost nothing. You might have a big day here or there, but if you do that day in and day out, you're just going to get wiped.
Yeah.
If you're not spending like I said last podcast, if you're not spending 60 to 70 hours studying, right? When the markets close at 4:30, if you're trading, now that's trading in the traditional markets. Crypto's 24/7, so that's different.
It throws me off.
But if you're trading, if you're day trade, because a lot of people, I see it on my feeds, like these guys that say they day trade stocks. Like when the market ends at 4 o'clock, if you're not continuing to study all the way out through the night, then you're never going to win. Yeah. Your day doesn't stop when the market closes. It actually just begins, because the next day you're just doing all the stuff that you studied the night before.
Yeah.
And people don't do it like that.
Yeah. So I don't get me wrong.
Somebody tweeted about some pharmaceutical company, and you just jump into it because it's this asshole on Twitter said it, and I'm gonna jump into that.
I can't do the trading, man, for crypto because the 24/7 around the clock throws me off. But when I'm trading options and stocks, the market opens at 9:30, you have the pre-market, you have the aftermarket, you have the trading session. It's more predictable. The most volume, the most volatility is in the first half an hour, so from 9:30 to 10, and then the most volatility to the end of the market is from 3:30 to 4. So that's more predictable for me. I'm able to identify the trends, and I get to see what's happening pre-market. I have a list right here that could be beneficial for you guys. I just wrote it down. I want to share this for you guys doing a trading. And a lot of this you can actually use for crypto too, because this is a crypto podcast. All right, so there's 19 catalysts that you should be looking out for if you're trading. And I know we're getting a little bit off topic, but out of these 19, many of these you can still use for crypto as a catalyst. So number one is unusually good earnings reports. So companies report earnings, and then you can, whether it's a pre-market or after-market report, then you can play based off the price action on that earning report. Ideally, you want a good earnings report. But just because it's a good earnings report doesn't mean it can't sell off during market. Again, you can use these for crypto. The next one is better or worse than expected guidance updates. This one you can use for crypto. A new product announcements. There's multiple times where these projects are coming out with new products that they can create for traders or real world products. A move into a hot new sector. A perfect example of this is AI. AI is a really hot topic to be in. There's a lot of great plays within the AI categories, and then again you can go in and
it's huge right now.
Yeah. Another one is collabing with an established company or acquisitions. So what's an example for that? Who just got bought out? There's a crypto company that just got bought out. Do you know of any right now?
No, I don't follow it like that
Yeah.
to really. I can give an example of like back in the day when I was trading stocks. You had either Burger King. It was I think Burger King had bought Tim Hortons, and so the Burger King brand had
Yeah. And
like merged with them, and
yes.
they made it like the menu changed with Tim Hortons because of that acquisition that they made, and
Yeah. Yeah.
and stock prices are affected by that. When you get some like information, like this is how the Nancy Pelosi's of the world and these guys in Congress make tons and tons of money. They're crafting these laws. They're in with these guys that are lobbying, and they get like wind of something that's going to be happening, and then they can trade on that, right? Just picture like, let's say that like in a month something's going to happen where a company is going to acquire another company. It's going to be this big acquisition, and nobody knows it's happening, but you do, right? So you can front run it. If I had that information, I could make a trade, buy a ton of that stock right now, and everybody be like, "Why is this guy buying this stock? It hasn't done anything in God knows how long." And then all of a sudden, CNBC News says such and such company is going to be acquired by such and such company, and the stock jumps 10%, and you just printed.
What do you think Nancy Pelosi did with Nvidia, like the chip
A,
companies,
lot, a,
like
bu-
the
a
AI
bunch of those
narrative?
stocks.
Yeah.
A bunch of those stocks.
Or like another example, and this is different, but like Pepsi, like no one really understands how much Pepsi owns of the market, right? They own so much of the market that you wouldn't think, like Gatorade and stuff like that. Another one is favorable government regulation announcements. So
Goes
obviously,
back to Congress.
yeah,
The lobbying of those Congress women and congressmen when they make those laws and they make it favorable for that company. Not only are they helping that company out, but the company's giving them the heads up, and they're trading on that.
yeah, insider trading,
which
dude.
is
Well,
not illegal.
Well, that's another catalyst is insider buying activity. Like you can see, especially with crypto, everything's transparent.
Crypto, you
can
more
see
than
it in
stocks.
real time, 24/7. You can see who's buying what. You can follow their smart, like their wallet, and it's all smart contracts and it's all transparent. That's why we love crypto because it's transparency. But like there's insider trading that you can't see, or it's too late once you find out, and the stock already went up 100%. New large contracts, like there's always contracts, companies that are working with other companies, getting big deals that you can do. Cost cuts. And this is one of my favorite catalysts, and they don't really, that's a good idea. They don't have it for crypto, but market upgrades and downgrades. There's always different banks, especially when I look at the bigger banks like Key, Bank of America. They're doing these analyst upgrades and downgrades that you can
They have
book.
analysts that focus specifically on that sector of stocks, and then they make decisions saying it's a buy, it's a sell, it's a hold, and then how they gauge that will affect future. It's crazy.
Yeah.
A bunch of guys say buy, and then what ends up happening? People buy. It's just like self-fulfilling prophecy.
Yeah. Obviously, macroeconomic events are a catalyst. We just had a Fed rate. Do you want to talk a little bit about what happened today?
Let real quick, since we're trying to keep things real simple for people. Like macro is like the stuff that's happening in the world. So the Ukraine-Russia conflict, that's a macro event. The Israeli-Palestine situation, that's a macro event. Get another example of like a macro. Let's say there was a natural disaster in Florida. Let's say Florida got smashed with a hurricane and it affected the grid down there. That would be a macro event that would have a effect on the sectors that supply energy down there, and that might affect the energy sectors, or it might affect, depending on if it gets shut down for a couple days, national. Like those are like smaller macro events to the larger like world macro. You have your local, your national, and your international events that will affect markets. Because everything's based on sentiment. So like sentiment changes based on things that happen that are not necessarily stock prices, not necessarily what's going on with the companies, but investors either get very excited if good macro events are happening, or they get very shaken and scared when bad things happen and those affect the markets each way. So today, an example of a macro event would be the FOMC, Federal Open Market Committee, had a meeting today to decide if they were going to either raise rates, which it was 96.9% as of Monday that they were going to keep rates the same. And they decided to do just that. The federal funds rate will stay at 5.25, between 5.25 and 5.5%. So all the rates will stay exactly the same. The bank rates that are given out for lending, as well as the bank rates that are given out for interest, all that is staying stationary for now. Powell spoke in a manner that was much more enlightening, and enlightening isn't the word used, much more like positive than it's been in the past, indicating that there's going to most likely be, which everybody already assumes, rate cuts this year. There's a school of thought that differs in regards to if that's good or if that's bad. I think the market, the algorithm of the market, views it as a good thing, but I think certain investors and economists and macroeconomists may not. They may feel that may, and again, traditionally, this is another thing I want to cover really quick. I brought it up to at work to some of the financial advisors that I work with. I was telling them, I said, we've never had an event like this year occurring, because traditionally, if you look at the past, because we always say like the past doesn't always have to play out exactly, but sometimes it rhymes. You know what I mean? So in the past, every time they've reduced rates, you would think because raising the rates the stock market ends up going down. Initially, when they bring the rates down, you have an initial sell-off in the markets, and then the markets will come back a little bit after that. On the flip side of that, every 4-year cycle of elections, an election year, markets go up. So we're anticipating, I think the markets have like 3, potentially 4 rate drops this year, while also having, so that traditionally would mean the market will go down. While also in November, you have a presidential election, which usually means the rates will go up. So we have this event happening at the same time, which I don't think has happened before, where you've had rate hikes in an election, or rate drops in an election year, and the election happening at the same time. So one event that causes the market to drop and one event that causes the market to go up happening at the same time. So it has a lot of people kind of like uncertain. There isn't a universal consensus of like what's going to happen.
It's like an inverse relationship with each other. It's
interesting.
interesting.
It's interesting. I was talking about that with some of the advisors that I work with, and they didn't really know how to digest that, because like I was listening to a Spaces today. Again, cut me off if I'm talking too much. I was listening to a Spaces today, and they were, and I was disagreeing, and it's somebody super smart, like Tone Vase. I like him. I followed him for a long time. Bitcoiner, but also like really understands finance. And he was talking about how like everybody's got to chill out. We don't need to reduce rates. Not that I'm necessarily taking the stance, but I disagree on his thesis for it. I don't necessarily think we have to reduce rates either, but the reason he gave for it, I wasn't really completely agreeing with, because he was like, in 1980, rates were like 14%. And Rich, you can identify with this. Like 1980, rates were like 14%. And traditionally speaking, over a 30-year chart, like 5.5% rates are low on average over the last 30 years. I think it averages out somewhere over 7%. So if you average out the last 30 years of rates, even with the last like decade and a half that we've had at such low rates, it's still over 7 because of all those double-digit years. But here's the difference that I disagree with, that I don't think he completely takes into consideration. The rate of inflation, like that 14% in 1980, was back when you could buy a house for like 30 grand, right? So you could afford that higher rate on such a lower amount of money, even wages being relative to that, than today coming in and buying a $400,000 house at 7%, right? Buying a house that's $400,000 at 7% is way more debilitating than 14% at 30 grand. Even if you're only making 25,000 back then, Rich. I mean, I was 2 years old at the time, but I think you can probably chime in a little bit more of how that.
Yeah, for sure. I mean, I remember buying my first house in 1991, 92, and the interest rates were like I think depending on what I got approved for, they were anywhere between 6.5 and 8. And that was a big thing. Like, oh my God, like you could get it and you could lock it in. Like that was a big thing back then. Remember, you'd lock in your mortgage rate and you're like, yeah, I'm saving like 0.5%. And you would just think about how much more house you could have afforded, because I would take like a spreadsheet and stuff and try to work backwards. So yeah, definitely like, and then I thought about, and then when I sold that house 10 years later in '02 or whatever it was, interest rates were like 3%, 2%, whatever the heck they were.
So
and I thought I was, and again, I when you think about how much you're paying in interest over 30-year mortgage, like that's a huge amount of money. Like people, and that's what you talk about, like what they don't teach in school. Like a mortgage, how much you're paying in interest on mortgage is or interest rates on a credit card. Like that is such a big deal for people, for sure.
And the other thing too, real quick, I just want to make this point as well. My generation, and even your generation, like it's not fair to say, oh well, in 1970s and 1980s the rates were double digits. It's like that's an irrelevant argument to my and your generations, because my generation went through the great financial crisis, right? At the like kind of beginning of our work careers, right? I mean, I graduated high school in 96, graduated college 2000, 2001, entered the workforce early 2000s. So like as you're accumulating, you figure the first 5 years you're in the workforce, you buy that first home. So I'm buying that first home right at the cusp of, not necessarily me, but my generation, at the cusp of the great financial crisis. And all of a sudden that happens. Rates go to essentially zero for a decade and a half, right? A decade and a half of my generation of working and seeing these low rates. And then all of a sudden you're like, well, 30, 40 years ago, we had double digit rates. So like, be happy that they're 7% now. It's like, wait a minute, hold on a second. My generation just spent a decade and a half navigating finances in this low interest rate, and you're saying it's okay for it to be 7% because it was double that 30 or 40 years ago. It's not fair to my generation or yours that didn't experience that. Now we're experiencing in a high inflation environment where wages haven't necessarily kept up to everything else, to the cost of all these other goods and services. So like lowering these rates will help people that are struggling.
But the prices of goods and services, specifically houses, forget about it. Like, I mean, it's not, it's like, people talk about it all the time. I think you guys talk about before, like, oh, a house in 1950 was $11, and like, okay, whatever. But like, it is, you take, whatever the I can't think of the word, like the price index of 72, or is that the year they use, like 72 used to be the one they would
1971.
1971,
yeah.
And you think about it, well, in 1972 dollars or whatever it was, right? Like it's not the same. Like it's what you're paying for the same square footage is, even with inflation and 1971 dollars, forget about it. Like that house is, you can't afford that house. That 25-year-old trying to buy his first house in 2024 is not the same thing as me trying to buy my first house at 25 in 1991.
Which gets us right back to the whole reason why we're here and why we're having this conversation, why we have this podcast, is because Bitcoin changes all that. The reason why that house is not the same is because we're pricing it in fiat dollars. Fiat dollars are not worth what they were worth before. Right? Fiat dollars, you have to look at it like an asset that's just depreciating in value. But the unfortunate part is that everybody's tied to this fiat mindset that the fiat is what we're pricing things in. But if you divorce yourself from that for a second and just take a step back and look at fiat as an asset instead of being the thing that we're pricing things in, and realize that the asset is worth less. It's like if I pretend this is like let's use baseball cards for an example, because we can all identify with that. Let's pretend this is a baseball card that was worth $100,000 at one point, and today it's only worth $20,000. So the asset has depreciated in value. It's no longer worth what it once was. The buying power of this baseball card was $100,000, and now it's only $20,000 of those fiat dollars. So now instead of the baseball card, now we have the fiat dollars, and we have to think about the fiat dollars as being that asset that's depreciating. The house hasn't changed, right? The house that was standing in 1975, that's still standing today in 2024, still the same foundation, most likely, maybe some upgrades and stuff like that, but it hasn't changed, probably in many cases, overwhelmingly so to justify that huge jump in percentage of value. It's because what we're pricing it in isn't worth shit. The fiat dollar is garbage.
Don't you ever think that, like, so people look at the stock market and they're like, oh, the stock market's going up, we're not in a recession. I truly believe, like, we're in a bad recession and it's correlated from the stock market.
I
Like,
almost responded today, and I stopped myself. I don't know if he's watching. He's in. I have friends with him on Facebook, but he messaged on Craigie Waldeck, had put something up, and I was getting ready because he was like the Build Back Better. He's a Democrat. I like him. I like the guy. He's liberal, more Democrat, and he was defending like Joe Biden. He was talking about stock markets at an all-time high, and I literally got the article up of how the S&P 500 in 2023 was carried by 7 stocks, and without those stocks, the rest of it was down for the year. And I was getting ready to, and I was like, you know what? I don't want to jump in this because all we're going to do is go back and forth. Where I know what actually is going on, and he's coming from a background of he just believes everything that they're doing is right. I'm not gonna. There's no point in engaging in that, but the point of talking about the stock market is important, which you just brought up. And the fact of the matter is, the number one important thing is the stock market could be at all-time highs until the end of time, right? For the middle class, it's an irrelevant measuring stick, because those of us in the middle class that are exposed to the stock market are not touching it for 20 or 30 years. It's doing us nothing today, right? My 401k that's building value is great 20, 30 years down the line. What is it doing for me right now? How does it help me today? How is it helping me navigate right now? It doesn't. It's irrelevant. That's number one. Number two is the amount of people that aren't even exposed. They don't have 401ks, or they're not investing in the stock market. So the guy that's getting by paycheck to paycheck, that can't afford to put money in his 401k or do any of the stuff that we're talking about, who gives a shit what the stock market's doing? I don't care about the stock market. I care about the city market where I'm going to buy my groceries. That's all I care about. Stock market's irrelevant. That could be all-time highs, but it's not affecting me, right? So the only people that's good for is the high net worth guys, the Nancy Pelosi's, the guys that are close to the money printer. That's the only people it's affecting, which again comes back to the conversation of Bitcoin and crypto, because Bitcoin and crypto, we are seeing that I can access my funds right now if I want to. If I wanted to sell all my Bitcoin into fiat, I could have those funds by it's 8:40. I could have them by 9 o'clock in my account if I wanted. There, after 6 confirmations, boom. I'm going to get crushed in taxes, and I would never do that. It's not smart. But like, we're investing in markets that give you actual liquidity today. So Bitcoin and crypto is way more powerful in wealth building than the stock market is for most people, because most people are not trading, which they shouldn't be, because we already talked about that. But the access that they do have to the market is in these vehicles that they're not touching for 20 or 30 years. And I'm not talking shit about those. 401ks are valuable. All the aspects that are tied to that market have a place in value. But to have an argument today and talk about the 4-year cycles with elections, and even because Trump did it too, and I'm not just bashing Biden. Trump did it too, and he's an idiot for saying it as well. Oh, all-time highs at his. Who gives a shit? It's not a barometric, it's not a barometer that we're measuring anything by, because overwhelmingly the middle class, it's not affecting them right now. It's not paying my mortgage. It's not putting food on my table. Even if my 401k is up 300%. What is it doing for me right now? Outside of me looking at that, feeling, oh man, 20 years, I'm gonna be on the beach with a mojito in my left hand and a cigar in my right hand. But right now, how am I gonna pay this mortgage?
so what do you think is a metric that you'd want to go? Because obviously the buying power is going down significantly, and I think that's a huge indicator of where we're at. But what is, like, goods and services? Like, what's a specific metric that you look at, or like a policy change that you think could be beneficial for the middle class so they can have an advantage despite not being able to touch their 401ks? Is there anything that comes to mind for you? Or
the only thing that
Bitcoin?
No, I mean that's the obvious answer, but I'm trying to, because like I've said, the Bitcoin thing may not solve for 2 or 3 decades.
Yeah, the user experiences.
I'm just saying, like, I'm being completely honest, even though I'm all in belief wise and conviction wise, I'm also a realist in realizing that this may not take foot for 2 or 3 decades. So in the meantime, we do have to have solutions that can help us today and right now. And the unfortunate reality is that the ideology that would take for that to occur doesn't exist in our current climate, because I just posted about this on Twitter, and I believe I even said it in our last video. Like, and I'm going to go even harder. Like right now, like if we want things to change, and again, this is people that are watching this live will probably get pissed off and feel whatever they'll feel because they're not thinking rationally because they have their tribes that they ride with. The only way that this starts changing, and it's not like, listen, people think that your voice is at the ballot box, like putting your ballot. At one point it was. At one point you did have power going to the ballot box. At a point in time when politics were not as partisan as they are now, and people worked together to craft laws and to pass things that actually affected our lives and actually went through, yes, you were right. You had an argument with that. That's not now. You are not, as a Republican or Democrat, incentivized in any type of way to negotiate with the other side. If you're a Republican, you're called a rhino. Republican in name only. If you agree with anything a Democrat says, you are ostracized from the party. On the other side, the Democrats, if you agree with the Republicans, same thing happens over on that side. So in that climate, how do you govern? How do bills get passed? Because you have two sides that are supposed to be working together. Yes, Republicans and Democrats are two different ideologies that are supposed to work together to craft laws. That's the whole point. Two different viewpoints that give and take in a negotiation. You get something, I get something, you give up something, I give up something, and at the end of the day, we do what's best for the American people. That doesn't exist today. That has died. It's gone. The quicker people realize that, the faster maybe we can build ourselves out of this. My thought process, the only way this changes is in November when we have this election, especially if it's Joe Biden versus Donald Trump, you don't show up to the polls. That's how your voice is heard. You want to have an election? We're not voting. Because we are not voting for the way that this has political landscape has changed into we can't get anything done anymore. Nothing gets passed that helps anybody anymore. We don't want it. Miss us with the election. We're not showing up. Nobody shows up and votes. And it'll never happen. I'm a realist. I understand it will never happen because you have people that think the Democrats are doing everything right. You have people that think that the Republicans are doing everything right, and they'll continue to tribe up, especially with social media, being able to go on there and troll each other and go hard and have this identity of that's who you are and this is who I am. It'll never happen. So we'll continue to go down this path. So to answer your question, I don't know. I don't know what can be done. Which is a big reason why my conviction with Bitcoin is as high as it is, because I know that I'm doing the right thing for my kids, because 20 or 30 years will be much more impactful for them than it will be for me.
Yeah. So in other words, you're voting orange?
Yeah. And he's not 78 years old.
You're voting with your Bitcoins? What's funny is I had a conversation with my dad, and it's a little bit separate from the political side of things, but I was sitting there and I'm sitting there with my little brother. I don't live at home anymore, but I'm sitting there with my little brother, and we're eating food and we're drinking, not drinking
Good classification, because any women watching this, you don't want them to get the wrong impression.
My dad's like, he's like, diversify, like don't stop with that crypto shit, buy this whatever, like buy the stock market. And I'm sitting there, and then I'm drinking like a Coca-Cola, like one of those little ones. And he's like, buy Coke or buy Coca-Cola. He's like, what are you drinking? You're drinking a Coca-Cola. Did you drink a Bitcoin today? Like, he's so tied to it's disgusting. And then he's like, you drove a Tesla to my house today. Did you drive a Bitcoin? No, I didn't drive a Bitcoin. Obviously, he doesn't understand it, but it's just funny. Like, he might be kidding. I do want to bring him on next week to have him on because he's a little bit of a skeptic.
Yeah.
But the beautiful thing about my dad is he's a skeptic, but he's also open-minded to the Bitcoin.
Your dad's a smart dude. Like, he's made money in business. Like, there's even the guys that are anti-Bitcoin but have businesses and have been successful in businesses, they can be orange-pilled.
It's crazy.
It just takes time.
It's crazy to me that these people like these finance guys that are like thinking like they're so like big, legitimate, smart, intelligent finance guys, and then when you have the crypto conversation with them, and they want nothing to do with it, or they have no idea, like you're not that smart, dude. Like no. You could, because most of the time they probably built their wealth through the traditional, like let's say you made $200 million through real estate and the stock market, and then this new technology emerges and you're looking at it, but you've already made your wealth in this like in those two asset classes. And you don't even need crypto to like build wealth because you've already built your wealth. So I can understand.
It's a wealth protector, and you can just point to Larry Fink and Paul Tudor Jones and all these billionaires that are thinking to themselves, I'm looking at Bitcoin and they understand fundamentally what it is. That's why they've gotten involved. But they're thinking to themselves, all I need to do is put 5% of everything I have into this. I don't need to go all in. The 5% over here, if it does what we think it can do, if this gets wiped out, this takes care of that.
What's crazy is there's 900 Bitcoins released
per day,
which is going to be cut in half in April 2024. This is when we talk about the halving.
Yep.
So instead of 900 Bitcoins being released into the ecosystem per day, it's going to be 450.
Yeah.
And guess who's buying 13 times that amount per day?
Wall Street.
So people that panic sell right now, you're selling your Bitcoins to Wall Street, man.
Something is happening right now that's not getting covered as much as.
Of course, they're not going to cover that.
Well, the run up to the ETF got a whole lot of airplay, and we talked about it a lot, and all the major stations talked, and then it passed, and the price dropped. So when the price dropped, the mainstream media kind of just like lost interest. But like the real like noise is happening now. I sent that article to you to kind of let you know. 13 times the daily volume of Bitcoin being released every day is being bought up by Wall Street. BlackRock is almost to, I think they're somewhere between 50,000.
BlackRock.
BlackRock is between 50,000 and 100,000 Bitcoin on their balance sheet right now. This thing's 2 weeks old. 2 weeks old, right? BlackRock's going to get to 1 million Bitcoin. They're going to have 1 million, and this is when like the price acceleration happens when the supply shock hits, because when BlackRock has 1 million Bitcoin, that's just a advertisement in and of itself, right? Then you have investors coming in to say, oh, I want some of that too. And BlackRock has to go back to the marketplace to get more Bitcoin, right? Because the Bitcoin that they have is already spoken for. They're buying Bitcoin for clients. BlackRock is just holding it saying, oh, I'm going to hold this and hope somebody buys it. They have to buy because a client came in, made an order, and said, I want an ETF to allocate that amount to my portfolio. So BlackRock, as a fiduciary, has to go out and buy that. They're not just buying it to like have it. They're filling orders. So at some point in time, when the supply shock hits and BlackRock's going to the market looking for Bitcoin, there isn't going to be enough there. So the price has to go up because that's supply and demand. When demand rises, the price must rise to slow down the ability of it to go off the exchange. You know what I'm saying? Like, it's just, it's crazy what's about to happen, and people don't see it, and they're not giving it as much airplay, which I understand and I get, but like this thing, the amount that you have 11 Wall Street players that are buying spot Bitcoin ETFs for their consumers. In a year, we won't have 11. They're going to consolidate. BlackRock will definitely still be there. Fidelity will probably still be there, and there'll be a fight among all the ones that are left over to stay in the space, because the biggest players are going to be the ones everybody's going to want to go to.
Do you know how much more volume the Bitcoin ETF did on launch day than the gold ETF? I think it did like 3x. Just for the gold bugs out there, let them know that
it was,
the Bitcoin ETF was more successful than the gold ETF launch.
It was one of the most successful ETF launches.
Just so you know,
history.
you know, Bitcoin isn't this fake internet magic money.
It probably long term, when we look back next year and years going forward, we'll probably be saying something like, "Thank God the price didn't do what we were thinking it was going to do."
Yeah, more time to accumulate,
because
we got a 20% correction right off the bat.
This drop in like chopping and lull is really giving these bigger net worth investors an opportunity to study more. Mm-hmm. And again, like the front running of Wall Street is over. Like, we passed that. Like, they're here. Wall Street's here. The accredited investors are getting allocations. They have Bitcoin and you don't now. And it's just, the time is continuing to get short of, there's gonna be a supply shock at some point, if not this epoch, definitely the next epoch, where you're going to go to an exchange looking for an amount of Bitcoin, and you may not be able to get it.
And if you do, you're going to be paying a lot.
Yeah,
for it.
well, that's what I mean. Like you're gonna
You're gonna
amount
be
of
paying
Bitcoin, not
way
necessarily.
more. If you're buying Bitcoin,
Let me rephrase that, because somebody commented and said, "Oh, Bitcoin's always being released." It's like you may think in your mind, "I want to go get 0.1 Bitcoin," but the amount it's going to cost to get 0.1 Bitcoin, you won't be able to afford to get that 0.1 Bitcoin. It'll be too cost prohibitive for you to get the amount of Bitcoin. You'll always be able to get some because it keeps getting released and it'll be on exchanges, but in a reasonable amount that you're looking for, it won't always be that way.
and you want to know who's hurting themselves the most? The people that aren't educating themselves. Because instead of buying Bitcoin today at 42K, you're going to end up buying it at 420,000. Does that make sense? So you're only hurting yourself by not diving down this rabbit hole. And if you don't do it today, we know where Bitcoin's going. We spent thousands of hours of research on this stuff. We know where it's going.
At some point in time.
At some point, you're going to have to adapt. Might as well adapt now.
What's going to be crazy is like somebody out there is like watching either us or another like Bitcoin podcast, and they don't own Bitcoin yet, and maybe they won't for a while, and then one day they're going to open up their quarterly statement from Fidelity or Vanguard or whoever they have their 401k policy employee sponsored program with, and they're going to look and they're going to browse through just to see like what exposures they have to things, and they're going to see like iShares, or they're going to see like the iBit, or they're going to see some sort of like, they'll be like, oh, I do have some Bitcoin in my, so like I could have got this thing way back when it was.
What I don't understand is I don't get how people aren't. I don't get how people aren't more curious. Like before I even made my first purchase in Bitcoin, I was so curious. I had to buy it, and I bought it before I actually understood it. Right? It took me at least 100 hours to fully grasp my head around it, and I'm still learning every single day. This is a never-ending learning process. Like whoever thinks they know it all, like no, this is every single day. You got to be opening up a book, podcast, something. Experience is huge, being in it for the long term. But just the curiosity itself, like I don't get how people are still on zero. Money's always changing. Like money's like evolving. Money's evolving. Like you have to adapt with it, man. Like I just think that's really it's odd. I feel sorry. I feel bad for people that don't have the time, because everyone has the same 24 hours. You have 30 minutes. Everyone's driving to work. Everyone's commuting to work, driving and sitting in traffic. Listen to a podcast. You don't even have to listen to us. We can give you guys people that are way higher up in the game than us, that they're going to be telling you the same stuff.
See, you say like, I have a different perspective. Like I'm almost jealous of people today, because in December 2013 and like 2014, I spent all of 2014 like trying to like learn more, because I like got it in December of 2013 where I was like, okay, it's not a scam. There's something here. And I read the white paper and spent all of 2014 like trying to learn more. And the places to find information in 2014 were nowhere near where it is today.
I know.
It was so hard. Like you go on YouTube. Like I remember watching, because I was already watching CNBC at the time, because I was trading stocks in traditional markets. But I remember just like watching CNBC for hours and just waiting for them to like mention the word Bitcoin, and just like it never happening. And then just like going on YouTube, and then I remember the first time like Overstock was accepting it, and that was in, I think that was in either late 2014 or 2015. Then I remember in 2017, like people don't realize this. There was a BitPay bowl. There was a bowl, a college football bowl in December, sponsored by BitPay.
That's
Only one
crazy.
ever, and I can't believe it hasn't
college
happened
bowl?
again. I can't believe it hasn't happened again since in 2017. Yes,
Yo,
2017. There was I watched. I don't even know who the freaking teams were that were playing. I didn't give a shit about the game, but they had BitPay commercials, and they were and it was a Bitcoin, and I watched it. I supported it.
So that's a perfect example, guys. You're looking through your phone. You're watching this video through your phone. You're seeing our video through your phone. You're getting information at your fingertips. You're sitting at home. You're laying on your bed. You're looking up. Swipe, consume, and you come across this video. And you're like, never before a time in history are we able to get information so easily. Now, there's two types of people in this world. There are the consumers and the producers, the creators. And I like to say this all the time. Are you consuming information? Not good information. There's what I like to do is, especially on Twitter, and that's funny how that guy from the gambling dude, the poker guy, Brian Rast,
Yep.
how you have to niche down and be more specific on who you follow. Now, if you go to my follow, I have an Instagram. I got a personal Instagram and I have a business page. Now, that business page, my only following are people that I get value from. And I am consuming, but what are you consuming? What type of information are you consuming? Are you consuming garbage, or are you consuming information that can actually get you somewhere and move you forward in life? And so I'm not saying there's nothing wrong with consuming. Consuming's fine. It's just, who are you consuming? So a simple strategy that I do is just unfollow the garbage, unfollow the models, unfollow all the things that are going to hold you back, cut out all vices, and just stay focused and consume the good information. Now, you're watching this video, you're getting some value, right? So get value, give value. So another thing is, don't just take, always give. Provide value. And now I have my personal page. Now I do a little bit of following people. Some people from high school, which I should probably unfollow you, but I'll follow you for now. But I will be unfollowing you soon, so stay tuned for that. But yeah, so kind of like niche it down, consolidate your following. But yeah, like I said, like never in a time before are we able to get this information. Now, I've learned, when I say thousands of hours of Bitcoin research, that could be part of your research, man. You can use X, which is Twitter. You can use Twitter. You can use Instagram. You can use TikTok. Like, TikTok's all right, but it's not. The thing with TikTok is I only create on TikTok. Like, I'm not sitting there on TikTok consuming. It's complete garbage. I hate the algorithm. It's nonsense. But yeah, X is great. If you want to start to read daily threads, try out X. We have our podcast. Don't forget to like, comment, and subscribe. Share this with a friend. We want to get back. We want to crack that algorithm. We took a week. We didn't post because we had a winter storm, and it just the algorithm's tough to crack. So we're trying different things. Bear with us, but we're trying to get.
And on that note, we got an announcement. So
we do have an announcement.
We'll clip this so we can use this for. We'll show this over and over again until we reach it.
Yeah, we'll clip it.
We are announcing a $200 giveaway.
Bitcoin giveaway.
$200 Bitcoin giveaway to one of our subscribers. We've been stuck in the 250s on YouTube. We're trying to build the YouTube channel. It's so hard. What we want to do is we want to get to 350. We want to add another around 100 subscribers.
Nah, we want to add 500. But this giveaway
we'll get to 350. We want to get to we want to get to
500 to make. You want to get to 500.
Yeah, we want to get to 50.
Get to 500. That's the first.
We're gonna do this giveaway. Once we reach 350, we'll give away the 200 to our subscribers. So what we're gonna need people to do is comment, share. Please, if you're watching this, subscribe. You have to be subscribed to win this.
Or don't share.
$200.
Either way.
You have to be subscribed. You have to be subscribed to win this 200. So if you're already a subscriber, you're already going to be in the contest. But we're not going to give it away till we get to 350. So if you are one of our subscribers, share this on your socials to get us to that 350 so we can give it away. We did a giveaway before, and we did allow the person to accept something other than Bitcoin. So if for some reason, I don't know,
she was from a different country.
Yeah, for some reason there's a logistical problem and you can't receive Bitcoin, we can figure it out. So if you win, you'll get $200 of value. We suggest you take it in Bitcoin, but if you can't, we get it. So starting now, we're gonna move forward from this video going forward, and then once we hit 350, we will make that podcast that we hit 350. We will announce the 350, and that podcast we are going to ask people to make a comment, and if you comment and are a subscriber, you will be eligible to win that $200. So help us get to 350 subs on YouTube. like I said, if you're already a subscriber, share this on your socials. If you're on X, if you're on Twitter, or if you're on X, X is Twitter. If you're on Facebook, if you're on Instagram, share all this out so we can get to that quick and we can give that away. And what we plan to do is do more giveaways on the way to get eventually past 1,000 subs. So we'll do it every couple milestones. We'll keep giving away. We want to invest in this thing. We want to make this thing as good as possible. We think we bring some value, and we want to share this with other people to get that out there.
I want to say one last point before we finish up here, and this is for people that are watching us. Learning this stuff, it's like working out. You go to the gym, you work out, you flex, you tear your muscles.
Like that, you mean? Like that kind of? That?
So yeah, guys, like investing and trading is like working out. You go to the gym, you tear your muscles, you go through pain, you go through suffering, and then the muscles grow back. And it's the same thing, but you're working out your mind muscle. When you're learning new information and you're experiencing different things, there's going to be a time where you're going to take a loss or you're going to make a hiccup, right? You have to take the experience and use them as paid lessons. Learn from your mistakes, because if you're not learning from your mistakes, what was the point? You did it all for nothing. So that's all I got to say is treat trading and investing and learning this industry as a muscle in your mind. And the stronger that muscle becomes, the better you're going to be. Now, working out, unless you're taking steroids, it's going to be a long-term game. It's not like something you're just going to get in and get rich overnight. And that's the biggest thing when people are looking at content online and they see people in crypto, they're automatically going to be attached to the quick money and the quick fast cars and stuff like that. And I'm telling you, that's all nonsense. That's all garbage. Don't even let that affect your, don't even look at that shit. Go to the gym, stay disciplined, and treat this like the game, because this is like my favorite game. I know people like to play video games, but this is the video game I play, investing and trading, and it's the best game I've ever played. So that's really all I gotta say. Comment, like, subscribe. You got a last minute thought?
Yeah, all this gym and muscle talk. Don't trust, verify.
Wow, let's see what I got.
Jeez.
Is this the thumb? Is the thumbnail?
We got a thumbnail.
Don't trust, verify.
Don't trust, verify, guys.
Buy Bitcoin.
Don't buy Bitcoin, not financial advice.